Hello, it's Cryptolyze. I hope you are well on this Wednesday, 13 December 2023. We're meeting today to talk BTC, to talk crypto. We have a lot of news though, quite a few things to cover. And then we will go to the charts to see what happened at the BTC level, to understand exactly the situation. It starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. We start the news right away with BlackRock, which has seen the SEC again. So it's not just BlackRock, there's Fidelity too. And so they updated their spot ETF with, in particular, the possibility of making a redemption. That is, we can recover shares of the ETF not only in BTC, but also in cash. This implies that the ETF itself, BlackRock, will be able in this way to sell the BTC from the moment the person decides to destroy their share, which is rather positive, because it mainly allows banks to be able to invest through the ETF because the main banks cannot hold BTC, and so that means that they put in cash, and when they withdraw the ETF, they get back cash. This is a big advantage. It means that they generally made a trade on BTC in this way, without making a trade in BTC and without going through an additional platform other than the BlackRock ETF, which is positive for precisely ETFs. Next to us, we have Celestia, which has integrated directly with the Polygon CDK. So as a reminder, Polygon, since they launched Polygon 2.0, which is their axis of evolution over the next 2 years, which is generally to transform Polygon as a sidechain of Ethereum into true full layer 2 and even full layer 2, allowing to build other blockchains. It is the notion of CDK, Chain Development Kit, which allows you to build blockchains on the Polygon infrastructure, and Celestia has interfaced with Polygon to be able to offer its data availability solution for all blockchains which are built on Polygon, namely that, for example, we have in mind OKEx and Immutable, which will be able to directly use Celestia for the management of their data and the accessibility of their data, and therefore significantly reduce transaction costs. Please note that Celestia is a Layer 2 blockchain built on Cosmos, which aims to be a modular blockchain, and to make its functionalities available to other blockchains so that they can simply specialize if they wish. Next, we have big news. We have Swarm. For those who don't know Swarm, it is one of the big players in decentralized finance, which is launching an OTC platform, therefore over-the-counter, decentralized, with the MyCA framework. I know it's a lot of information, but if we dissect it a little, it implies that Swarm has just launched the first OTC platform, which is sufficiently decentralized to pass the MiCA regulation in any case compared to the current structure, which is rather positive to see how it will unfold, if it will not just be a sandwich after that. But in any case, the platform itself aims to offer the possibility of exchanging real-world assets, tokens, a little bit of everything, in a completely legal way, and above all, having the possibility of reducing the spreads as much as possible. Therefore, the price differences when making an exchange, which is rather positive. Speaking of Europe, what is interesting to see is that we still have a set of protocols which are in the process of forming a coalition with NIMH. We have Protocol Lab, Oasis, and Aztec, which are trying to set up, in fact, a form of alliance to maintain privacy within Web3, which is very important. We know very well that it is very complicated. Zero-knowledge proof helps with this, but it must be instantiated in an environment that is secure and allows you to have this notion of privacy, which is the case, for example, with Aztec's solution, but we know that this is not the case on many other blockchains that build ZK-Roof. The notion of security has been implemented in the ZK. On the other hand, the notion of privacy is not yet on many protocols, to see if it will be one day, especially when we look a little bit at what is in place. Evolving on our side, we have at the level of Ethereum, the arrival of SSV, which is very important, which uses DVT. So SSV is a protocol that will allow Ethereum stacking without owning 32 ETH, and without using a protocol like Lido, namely that they will use DVT technology, which allows validation distributed, so that is to say that there are, for example, 10, 15, 20, 31. 100 people who come together to be able to set up validation of Ethereum. And that is totally decentralized. It is totally transparent. And therefore, we have the possibility of being able to do it without going through a platform like Lido and knowing that if we have protocols that are built on it, it could in fact be the end of liquid staking. Although we must also understand that the notion of liquid staking, the primary advantage, was to offer you liquidity while stacking. This means that you stack your ETH, for example, which are blocked in the network to validate transactions. But next to it, you hold a new token which represents the ETH stacked. And precisely these tokens, you can deposit them as collateral to, for example, withdraw USDT or borrow USDT, or why not sell part of your steth without telling yourself that you will have to destace and so on. This has big advantages because we add liquidity to these tokens, and in any case to the stacking. Next to us we have Aptos. Aptos, which has 25 million APT tokens which will be unlocked, which represents $200 million. So it is really very important. We are talking about almost 9 of the supply in circulation. So we will have to be very careful in the days that arrive at Aptos. I even think that it is happening quite quickly. At the macro level, we had the inflation figure which came out, that's it. 3.1, so equivalent to what was expected. What is also interesting is that we don't have too many modifications on the structure of this inflation. We still have here the continuity of deflation which is found. In terms of energy, we can clearly see October, November, and I think that when we have December, we will also have a continuation of the decline. We are not going to hide it. We will see on oil that it continues to decline. Sink in, and we are going to address precisely this point. So there, for me, we are in something which is completely coherent. We see that the fight against inflation is working. Inflation, which was initially sticky, is no longer so, or in any case, it is much, much less, mainly thanks to the lasting fall in oil that we have already had for 6 months. But what is also interesting to see, and which we must remember, is that 3.1 is still very high. The Fed's target is 2. Understand that just because we're back from 5 doesn't mean that we're going to stop there. This means that on average it must be at 2.31. It is the top of the average when we have inflation that is controlled. So that means we have to go down to 2 or even perhaps below. And if the Fed's target doesn't change, that means we could have rates that don't pivot as quickly as expected. Particularly by the market, today we have the FOMC. So 20, very important because it was followed by yesterday's CPI. So obviously we are going to have a lot of discussions. We are especially going to have a press release, I think, which will certainly be half fig, half grape, which will be between 2, yes, it's better. But we're being careful. Don't worry, we're not going to go down straight away. Well, it's going to be almost the same. Nevertheless, in all cases, we know that the market will wait for this speech. So we will have, as usual, at the opening until 20, a chase of liquidity and erratic movements. So we are very careful in particular on the SPF 500, SP 500, which overall reacts rather positively. We see that the candle continues to accelerate. We will have to see, are we holding this candle there? Are we going to close on Friday above? There we would have a signal which would be rather positive. The only thing that really scares me is the VIX. The VIX continues to sink. As a reminder, the VIX is a volatility index. Understand that as being a risk premium, okay? So it's either that the people, it's options who will buy these risk premiums by saying, okay, well, if we ever have a market which waffles, I know that I have my options, so I know that in any case I will hedge my position. There is currently no one covering his position. Understand that if it is so cheap, that implies that there is no one who wants to buy it. So everyone is currently convinced that there is an upward acceleration on the American market and that we will not have any luck here. And that is very dangerous for the economy. It means that overall, no one has coverage. So if we ever have a stall, we could go very, very quickly into liquidation cascades on the SP 500. And so on that, it's as usual when we are at these levels, we always pay very, very careful attention to the American economy. That means that we are perhaps already in a form of overheating at the level of the SP 500 and the NASDAQ. Although, as you can see, we can instantiate ourselves and we can stay in these periods for a very long time. So why not instantiate here before slowly going back up, perhaps with a form of instability linked to American politics? So with a small rise in the VIX, I am still quite skeptical of the general state of the VIX currently. For oil, if we look, we see that the Gillard candle was just impressive, in which we closed below the 3 previous candles so we clearly mark the trend. It was indeed a retracement in which we mark the trend with the closing of the candle below the three previous ones, and I strongly think that we are going to retest the 66.5 at first and perhaps see a little overextension in the 64. I think that there we will really be in a purchasing zone which will be really very interesting to accompany the price. The probability of breaking this level is still relatively low. I think we're more in a form of ranging where we're going to stay here. If we ever break that, well, I think we will look for liquidity below 61. The probability of seeing a barrel again below the 40 is still really, really very, very low. I think that it will necessarily be excessively bought back in this area, that we will pass the really fateful bar of 67, it will be directly bought back. We will see precisely the type of candle that we will have at that moment. But the longer we stay in this zone, the more we have inflation which is controlled, and therefore the more we are conducive to the establishment of a pivot by the Fed. Aside at the BTC level, we still have this candle which continues to sink. If we look at daily, what is interesting to see is that we had a breathing candle yesterday, followed today of a candle which is already starting to be relatively aggressive on the downside. And when we compare a little following the acceleration of the breakdown of 32,000 that we had, we did not really have any candles break up like that, okay? It's the first one we see. We have a set of small candles in which we have made small breaks here, but it is relatively weak. There we still have a large candle which clearly indicates an intention to retest a lower part. Lower part that we have in mind here with this CME gap. Obviously, I mean, when we have a gap that is being swallowed up little by little, we know that it is not a breaking gap, so the probability of filling it is still very high. The question we have to ask ourselves is how far we are going to go, because there is still a lot of liquidity waiting on the market. When we look at the Kingfisher, we can see that we have a liquidity pool which is already at 38,800, a second pool which is still the same, although it has decreased a little because we have a big pool of liquidity above. We're going to discuss it, so which is around 38,000, 37,000, so we have a big level of liquidity here, which is just below the CME gap. We also see that the market here in terms of CVD is relatively weak, so we have a market that is not aggressive, although the fall in CVD, therefore the fall in activation limit orders, begins to stabilize with a small reaction here. So that means that we have the interaction taking place here, rather aggressive. And where is the aggressiveness? She's there. 44,000. We can clearly see the liquidity clusters at the short level which are very impressive. Really very impressive. And we can clearly see that they were built in particular in all this bearish acceleration. The people are positioned because we have a bearish intention which has been validated. We are going to put ourselves here in which we can clearly see the bearish impulse, second bearish impulse with liquidity gain, almost non-existent reaction. We will say that we did not break the previous high, whereas when we normally have a diagram like that for a bullish impulse, we have a reaction, which is very strong with in particular a rupture which is carried out. This is not the case. We see that we are in a form of consolidation, so either we are in a form of accumulation, of reaccumulation of wick-off, thing that I'm starting to doubt now when I start looking at the order flow. I'm really monitoring it because there we could very well go into a redistribution and break bearish, okay? So if we ever have a little axle like that and we redo a little distro and we actually break this level and we're going to take the liquidity here and we're not bought out, understand that we must be redeemed. There it is not enough, in fact, the acceleration too. We must be redeemed. So we must have the candle, and in fact have a large encompassing candle. The first, in which we will close, for example, above the previous one. There, at this time, we have a signal to say that we have volume and that we have people who are aggressive in buying up these areas. Currently, this is not the case. We are heading towards the end of the year. Good. We are still in this dynamic and making a second bearish impulse to get the liquidity at the bottom. Is the liquidity at the top currently sufficient? Hop, let's sit here. Here the 44,000 are enough to go and do our retest and say that we are going to liquidate this part. I'm starting to doubt. I'm starting to doubt because it has certainly already been present for quite a short time, but nevertheless, we have here a call for prices which is very strong. Yes, but that also means that we have a form of positioning which is very strong. Here we have top trader positions which are mostly long. We have no retracements, so we do not currently have any top trader positions under shorts. We have an open interest which is relatively flat. Same here. It implies that we have as many positions which open and which close. So we have a maintenance of the current levers. We have more for less, a form of repositioning of part of the positions of the people, a form of market rebalancing which in fact corresponds to this lateralization. What is interesting is that this is corroborated in particular by the liquidation heat map, in which we see that the 44,000 pool is relatively weak. All right? We have a small pool which was built between 42 and 43, so which in fact corresponds to all these tops which have not been taken. Therefore, to all the short-term liquidity in which we can make a small wick to liquidate all that, but we don't have any big short positions that are in the process of being positioned. So we are more in a semi-sluggish form for me of the course, and we are quite simply in a form of consolidation before continuing the course. Movement for me, A, B, C, for a bearish continuity to seek liquidity here and then. We will see the reaction of the price. 1 on the CME, therefore the 40,000 bar, which will be very important. This is one of the reasons why we hold the 41 is because we are 40 below, and 40 which are really very important. And if we break the 40, that means that we are going to consolidate below, take the liquidity, and the question will it be, are we making a nice accumulation to leave, or are we making a good distribution? In any case, we will see it together in everyday life. We are going to end the video on Total 3 in particular. Why does Total 3 represent altcoins in which we still had something that held up rather well yesterday, and we see that it is still very complicated? Here we do not have a transfer of liquidity which is taking place and which continues to take place in altcoins while we are precisely in a landing phase. At the BTC level, on the other hand, we see certain shitcoins which are accelerating upwards, and many people right now are positioning themselves by saying, okay, we had BTC here, we had altcoins, we has the shitcoins. So that means that at some point we will have a retracement of BTC which will be much more violent. Because the cycle is finished. It's true that in general we still do that, except that there is the small Ethereum passage which was very weak. We were still expecting a lot more Ethereum, but that wasn't the case. So, see you later. If this is really the case, we should have a downward trend in the following week. Very aggressive, and we will see how far we retrace, which would correspond precisely to the establishment or the pre-establishment of sell the news, which has already been expected for some time, by the rumor sell the news, particularly on spot ETFs. And the more it progresses, the less impact we see of the news on ETFs, because we remember that we still had a lot of news about ETFs, which I spoke to you about in start of the video. There was almost no impact on the BTC level, and which are rather positive. That is to say that we are in the process of setting up an ETF which will be available to American banks, and no reaction from the market, in any case positive, which could be a sign of the establishment of this sell the news. I hope you liked this video. If so, don't forget to leave me a like and a comment. We'll meet you at 13:30 for a surprise video on a crypto surprise. And yes, I haven't defined it yet. We're going to look at it right away. And so it's at 13:30.